In this video, let us look at the shooting star pattern. This is a daily time frame chart of Berger Paints. It's a paints company in India. It's an INR chart. So this is a shooting star. Let us look at the conditions for a shooting star. It's a bearish reversal pattern, very strong pattern. First condition is it must come after a uptrend. The second condition is the height of the upper shadow must be twice the height of the, at least twice the height of the real body. The third condition is the real body should be as small as possible and near the lower end of the trading range. This is like an opposite of the hammer. The fourth condition is the lower shadow must be as small as possible. The upper shadow must be as large as possible. The upper shadow represents bearishness. The lower shadow represents bullishness. Number 5, the color of the real body can be green or red. So those are the conditions for a shooting star. It's just the opposite of a shooting star. Remember, the real body should be at near the low end of the trading range. So trading range is high minus low. So it should be near the low. For a hammer, it is opposite. For a hammer, the real body should be near the upper end of the trading range. So something like this. So this is the trading range. So the real body is near the high. Here the real body is near the low. So that's the shooting star pattern for you. Very, very powerful pattern. The high of the shooting star becomes resistance. If you were to take a trade on this chart, that would be your entry point. That would be your stop loss. You would take a short position and you would aim for this level maybe. That's a nice 4:1 or 5:1 reward to risk ratio trade. And look what happens. That target is achieved. Although it takes some time, it took almost 3 weeks to hit that target. But look how powerful that pattern has been. It's a very, very simple pattern. So one candle pattern. In this case, the trade was risky because the shooting star was not confirming any prior resistance area. If it is confirming prior resistance area, then it would have been a high probability reversal. So this was a risky trade. Moreover, if the next candle closes below the close of the shooting star, then that is called as price confirmation, which is even more bearish, right? So if you had not taken a trade on this candle, at least you could take a trade on the close of this candle. Both would have been worked for you, and that would be your stop loss area. So you can see how powerful the shooting star pattern is. Go to this link. I have placed this link in the description box, where I have a very comprehensive training program on Japanese candlesticks. Thousands of students from all over the world are already doing that program. Check it out, it will help you. You will learn the shooting star in that training program in great detail.